I want to head to the CBO. Scott Bauer is the CEO of Prosper Trading Academy. All right, Scott, let's get serious. What are you doing about this Beyond Meat situation? Are you trying to, get in front of a blow-off top or what?
Do we know it's a blow-off top? I mean, I don't know if we can say that or not. I mean, this thing's been trading for a couple weeks. It certainly looks like it. There's all the talk about how much short interest there is, that we had a big short rally, big short covering rally. Now we got the downgrade. So the bottom line is, Oliver, nobody knows. Option traders don't know. The street doesn't know. Analysts don't know what the next move is going to be. So when you're looking at a trade in something like this where, volatility is pretty much off the charts, puts are exceedingly more expensive than calls because you can't borrow the stock, and that's a concept that I'm sure you guys can talk about later.
Sure.
You look at something like this, and I look at something like this after having seen just about everything in the option world you possibly could over the last 30 years. And you look at it and say, whatever I do, I've got to keep it unbelievably close to the vest with some really close, very tight stops. So what I'm going to do is a trade for this week. And I'm just going to sell some premium. The only reason I'm doing that is because I think it's expensive. Do we really know if it's expensive or not? No, we don't.
Yes,
because
great point.
there's not enough history here. There's not enough history. But what's that? What were you going to say?
Oh, I was just going to say, I love that point, Scott. A very nuanced approach.
Yeah, exactly. So what I'm going to do is I'm going to sell a put spread and I'm going to sell a call spread for this week. I'm selling the 120, 115 call spread. I'm selling the put spread and the 165, 170 call spread. So down below, up above. I can collect $2, maybe a little bit better than $2 on that. Is that a good price? I really don't know. And again, I've seen everything this market has to offer. I don't know if that's a good price or not, but I know I'm going to collect $2. Someone's paying that to me today. I know what my max risk is. So anything that anybody does in Beyond here should be completely risk defined, which this trade is. You know what? Maybe this works, maybe it doesn't. I'm not a fan of trading something like this that's only out there, options being listed for a couple weeks or so, until I get a better feel for how volatility trades, how the street is reacting, this, that, and the other. But I'm going to look at this, take advantage of some of this premium, and try and collect it.
Scott, really interesting, and I like the perspective here that is no matter how long you've been doing it, the market can always surprise, right? Because we were looking at the analog to Tilray, but you remember there were days where people said, oh, that's it, that's the top. No, this one's the top. Oh, and then all of a sudden we had that session that was insane. So for Beyond, when I look at this and I look at your trade, here's what I'll say though. I want to get your take on this before we let you go. The risk to me seems to be that the stock drops, into your into the put spread that you're selling at 120, right? But given that you're selling higher up, I mean, where's your actual break even on this? Is the risk that this thing unravels quickly and goes down to like $90 or something?
I definitely have risk there. So let's say I can sell this thing for $2 total, my risk to the downside would be anything below 118. My risk to the upside would be anything above 167. Okay. And that's for this week. But that being said, Oliver, my risk is completely capped out. It's completely defined. If this thing blows out one way or the other, the maximum this trade could ever be worth is $5.
Right. Scott, lastly here is, it's a short-term trade you're looking at, but at what point do you want to take the profit from it? I mean, because if it does start, I mean, who knows, right? If the thing starts to unravel really quickly, and today, we're looking at 115, what is that? I mean, are you going to say, look, I want to get out of this, or are you riding this out basically till the end?
No, I'd probably give it at least through Thursday. Now, that's unless, obviously if the stock drops another $40 today, or if it rallies back $50 today, that's a different story. But I'm probably giving this until at least Thursday, because even if the stock goes below the put strike, above the call strike, there's still going to be so much premium left in these options that this trade is not going to go out to $5 just yet. And I'll be able to hopefully scramble out and maybe get out at a break even, a slight loss, something like that.
Yeah. All right, Scott, awesome stuff. Really important lesson for traders, investors watching, and an interesting trade looking to sell the premium on Beyond. not so much the direction. I like it. Scott Bauer, CEO of Prosper Trading Academy. We'll be right back.